Thank you for joining us for our 2016 budget update. Please remember that these are proposed changes if the Liberal coalition government wins election. If they don't, we may well be looking at different rules. First of all, there is a lifetime cap now with regard to how much you can put into superannuation after tax. We call that a non-concessional contribution. Currently, the non-concessional cap is $180,000. And you used to be able to have what is called the bring forward rule, which meant that you could bring forward $180,000 over 3 years. So $180,000 times 3 is $540,000. The government from the 3rd of May is now saying that the bring forward rule will be capped for a lifetime at $500,000 and will be indexed to average weekly ordinary times earnings. The lifetime cap will take into effect from the 1st of July 2007, and contributions made between the 1st of July 2007 and the 3rd of May 2016 will be counted towards your lifetime limit. There's also going to be a reduction in the amount of money you can put into super and claim a tax deduction. This is called a concessional contribution. Previously, if you were 50 years of age or more, you could put in 35 grand, and if you were under 50, it was 30 grand. Now it's proposed, again from the 1st of July 2017, that this limit will be $25,000 per annum, irrespective of your age. And obviously, this will affect those that are on high incomes, whose payments may well exceed this. There's going to be an allowance to catch up for concessional contributions. So currently the concessional cap has been applied on what they call a use it or lose it basis. From the 1st of July 2017, the government will allow eligible individuals to make additional contributions where they have not reached their concessional contributions cap in previous years. This option will only be available for individuals with balances below $500,000. It's proposed that the unused amounts will accrue and be carried forward on a rolling basis over a 5 consecutive year period. Again, with only unused amounts accruing from July 2017 being eligible. There's also an introduction of a $1.6 million superannuation transfer balance cap. So from the 1st of July 2017, the government is proposing to introduce a cap on the amount of money you can have in pension status. And this cap will basically limit the amount of accumulated superannuation money that an individual can move into a pension fund. Subsequent earnings on balances will not form part of that cap, thankfully. Where an individual accumulates superannuation in excess of the 1.6 million, so if you had $2 million in a pension fund, for example, 1.6 would be fine, but the other 400 would be treated like it was in superannuation and taxed at 15%. Please remember, 15% is still much lower than paying tax at your marginal rate of tax. A tax will be applied on the excess funds above the $1.6 million. And again, this is going to start from the 1st of July 2017. The next point is the removal of the work test to contribute to superannuation. So currently those that are aged 65 to 75 have to meet the work test in order to put money into super. People aged 70 and over have also been unable to receive contributions from their spouses. From the 1st of July 2016, the government will remove these restrictions for individuals aged 75 years of age and less. There's also going to be a removal of the maximum earnings test to qualify for a tax deduction for a personal super contribution. So previously, if an individual was engaged in other employment, a deduction for personal super contributions could only be claimed if their income was less than 10% of their total income. That is income attributable to employment activities not exceeding 10% of income from all sources. The government is planning to abolish this test, thankfully, and all individuals up to 75, regardless of their employment, circumstances will be able to make these concessional contributions up to their cap and claim an income tax deduction for these contributions. There are changes to taxation on transition to retirement income streams, which is important. The earnings on superannuation fund assets that support a pension are currently exempt from tax. A tax exemption where the assets are supporting a transition to retirement income stream will no longer be available from the 1st of July 2017. This means that after this date, earnings on fund assets supporting a transition to work strategy will be subject to a maximum of the superannuation tax rate of 15%. There will also be an introduction of a low income super tax offset. So currently, individuals with an income of up to $37,000 automatically receive a contribution of up to $500 paid directly into their super. This will not be available in respect of concessional contributions after the 1st of July 2017. Instead, this will be replaced by a low income superannuation tax offset, whereby individuals with an adjusted taxable income of $37,000 or less will receive an effective refund of tax paid on these contributions up to $500. This will be paid into their superannuation fund. You can also make spouse contributions more attractive, so that from the 1st of July 2017 the government will increase the access to low income spouse offset, which provides up to $540 for the contributing spouse. This will apply where the low income spouse's income is up to $37,000, which is an increase from the current limit of $10,800. Basically, these are some of the points, there's about 10 of them, with regard to the changes to superannuation and pensions. Let's wait to see what happens in the election, and then we'll see laws passed, and then we'll be able to act on this. If you have any questions, best to send us an email and we can be in touch accordingly. And the background video, which I'm sure you're all asking about, is very interesting. It's actually Professor Lowe, who in 1862, in the War of Northern Aggression, was in a balloon, which was the first time a balloon was used. It was actually a hydrogen balloon named Intrepid, and he floated across the Confederate lines as the Union besieged Yorktown. And he flew over the Confederate lines to observe what was happening in the battle and report back to General McClellan. Unfortunately, the handlers of the ropes let go and he floated right over the Confederate lines and then thankfully landed safely on the other side where the Union were. And that was the Battle of Yorktown. Thank you.